now from this inspirational story, we move to build versus buy topic on navigating incumbents and insurtech strategies with Mr. Lars German. Please join me in welcoming Lars.
Thank you very much. We're actually missing 2 people out of the panel, so could I ask you to help us with this? In the meantime, I think we will get placed and we can start a discussion. Edwin, please join me from Jadid, Kagabo from Greenlight. Yeah, please have a seat. Yeah. Donald is coming, so we are just short of Abdullah. Thanks. So thank you very much for being here. I was really looking forward to have this discussion. Why? Because obviously we have spent already 2 days together talking about Insurtech. But apart from this, because I believe we have really different views on how we execute our engagement with Insurtechs. Not necessarily because we're different people, but I believe we love your work for different kind of companies and company setups. So I think we talked a little bit already about QSC and QSC Digital Venture Partners, what we do. So I would like to ask you quickly to introduce who you are and for what company you work, and then we go a little bit deeper.
Thank you, Lars, for having me, and nice to meet you, gentlemen. So my name is Edwin Haj. I head the digital transformation of Jadid Capital, which is a group of about 62 companies that operates across the insurance value chain in the Middle East, Africa, and Europe.
Yeah. So I'm Kagabo. I'm an actuary by background, but I'm the head of innovation underwriting for Greenlight Re. It's a publicly traded company based in the Cayman Islands, listed on the NASDAQ. And, we engage with a variety of insurtechs and, we'll get a bit deeper into that as we.
Thanks. Good to see you all. Good morning. My name is Don Lacey. I'm the Chief Investment Officer at an investment manager called Ping An Global Voyagers. We are backed and owned by Ping An Group of China. We do growth stage investing in fintech and digital health all around the world, but significantly into the United States. I look after a proprietary Ping An pool of capital and a pool of capital that consists of LP commitments from large insurance companies from around the world, as well as Ping An. I've also been involved with a lot of different innovation exercises with Ping An over the years. I've been at Ping An for 8 years now.
Thank you, Adon. Maybe we can quickly stay with Ping An. I think this is one of the biggest insurers globally. And I believe a reference to most of the bigger insurance. We have been all looking into what is Ping An doing over there. It's just a massive market, and you cannot do it by hand. You have to have tools there. So what is the story behind investing not in China, but mainly in the States? So how does this come?
Sure. Does this work? Yeah, this one's on. For those of you who don't know, sometimes people are very familiar with Ping An, sometimes not. We are, I think, the largest insurance company in the world by several metrics, but oftentimes people maybe are not so familiar with us as they might be with like an AXA or an Allianz, because virtually all of our operations are in China. We insure roughly 1 out of every 6 people in China, and our business lines span from banking, securities, other kinds of financial services, to all manner of non-life and life insurance businesses in China. We've built, Lars, a lot of things that I can elaborate on. Some of you might find it interesting. We built a lot of things in-house that rely on AI and other technologies, and we have incubated a lot of what are now quite large businesses that help us get a better handle on next generation distribution. So we have built a lot of things in-house. We have a lot of PhDs and a lot of data scientists on staff at Ping An. But I guess that we've always had a strong view. I guess we've had 2 strong views. The first strong view is that there's always stuff to learn going outside. You know, you're never gonna know it all, and it's a real mistake to think that you do know it all. So there's always a ton of advantage to going to other pockets of technology innovation around the world and seeing what's on offer there. And that view, I think, has been very beneficial to us over the years. I guess the other view that we have, and I think this is a ping-on view, this is also kind of a view that we have at the little fund that I look after, is that you guys will bear with me for a second. You know, many of you, I think, probably work in financial institutions, and many of you know that most of the processes that you have in your financial institution, whatever it is, a lot of it's not how you would do it from the ground up. It's not very efficient. You have a process that you follow because in 1989 you acquired another company and you never really finished integrating the tech stack. Or there was a guy named Bob who doesn't even work at the company anymore, but he had a really strong personality and he said, well, this is the right way to do things. You know, there's all kinds of kind of silly processes that are unnecessarily idiosyncratic that reside within pretty much any financial institution anywhere in the world. And for a very long time, for almost like the entire history of financial institutions, there was kind of no way around that, right? You couldn't, that was just the way it was. And I guess that what we believe strongly is that we're kind of now at a point where, because of the internet and importantly because of the widespread adoption of cloud native solutions, there's all kinds of processes that reside within the functional stack of a financial institution that you can now kind of outsource effectively in a way that you just couldn't before. And that can be claims, it can be sometimes underwriting, it can be parts of your investment management function, it can be parts of your distribution function, it can be all different kinds of things. And there are now SaaS or SaaS-like solutions out there that you can make use of. And if you believe that, then the dumbest thing you could possibly do is to say, oh, well, we're going to ignore those solutions and we're just going to like do all of our stuff on our own. I mean, the whole virtue of cloud native SaaS solutions is that you're part of an ecosystem of people who are all consuming that service, and you don't have to go through the hard work of maintaining something on your own. So that's another pretty powerful reason for us to be looking at things in the US and elsewhere.
Okay, thank you. I think we could continue talking about this, a couple of questions, but I would like to move to Greenlight. I think you obviously don't have the size. Nobody has the size of Ping An, yeah, as we have learned, but there are different ways of engaging with Insurtech. And when we met each other and you told me what you're doing, it's like, wow, that's a different way. Never heard about it before. So maybe you can explain a little bit how you do an engagement with the Insurtech.
Yeah, so basically, unlike Ping An, we are very small, 50 people, in the Cayman Islands, really far away from everything. But, you know, we saw that innovation, or, you know, you can't run away from it. And so how do you do it as a small company without the workforce that, you know, the bigger incumbents have? And that's when we decided to start Greenlight Re-Innovations. It's really more of an underwriting-driven investment thesis. So basically, we're looking to invest in companies. So our portfolio is now about 35 insurtechs. We're looking to invest in people who have expertise in areas where we don't, and who can create unique underwriting opportunities for us. So because, you know, there's no way we're going to be able to underwrite all those opportunities ourselves. So we're investing in startups that are in really niche specialty programs. So how do we do it? Obviously, as I said, it's underwriting driven. Second of all, it's really early stage, because that's a way we find that we can engage with the startups, you know, when they're early stage. So our average size check is about 750,000. We can go up to 2 million. These days, it's a little less given the markets. At the same time, we want to grow with them, so we can provide them underwriting capacity at the same time, not just an investment check. So we do it through our insurance company. And then last year, we also opened a Lloyd's syndicate, which now gives us access to sort of primary insurance paper around the world. And then from then on, we actually create an ecosystem for a lot of these early stage startups. So we bring our expertise. You know, most of us are actuaries, and we've underwritten a variety of lines. We link them up with other investors. So we like to invest. We believe in sharing. So, you know, caring is sharing. So we bring a whole capacity network to this, and then we bring an investor network to all these companies. So that's a way to make ourselves even more valuable, just beyond just cutting a check. And yeah, and we are pretty much, we engage with them all the way through the journey because, being a small company, our balance sheet is not that big. We invest from our balance sheet. But at the same time, by bringing extra capacity, extra investors, these companies, when they grow, we don't become a hindrance to their growth. And that's been fairly successful so far. And yeah.
Yeah, I think it's impressive. At the company side, we're having 35 Insurtechs here supporting through investments or through capital capacity. It's really interesting. I think we have done similar things in QOC with Antares. Some went really off and some didn't. But it's an interesting model in terms of business development and growing with interesting areas. But you need to understand the business, right? It's not, as Donald said, it's not tech in the end, right? It's more specialty insurance, where what we've heard from Caribou as well. Right? There are niches where you can successfully grow and supporting Insurtechs and insurance companies. Thanks for this. How is the regional answer to this? Because you're doing something similar.
Yes, indeed. Well, in our case, it's a bit particular because we're a group that operates across the value chain, and in 45 geographies, of which a lot of are emerging markets. So you have very different, first different business activities, then you have also different regulatory environments, and so on, and cultural specificities as well. So the breadth of our engagement is huge. Something that has been very helpful is, first of all, identifying pain points and opportunities at every level. Ecosystem partnerships have been very, very useful to do this, to not only engage with Insurtechs, but keep the engagement flowing, identifying the right partner for the right use case. And in parallel, we've been building our own technology capabilities. So basically, we've been growing in parallel through acquisitions and organically throughout the past couple of decades, especially. And this is why also we're very excited to be part of, to be members of the MENA Insurtech Association, because not only will it help us have more continuous access to regional startups and to the serious Insurtech players here, but also it's a platform for us to play a key role in helping the Insurtech players thrive. And because as Caribou rightfully said earlier, the coexistence and the close collaboration between incumbents and Insurtechs is really the way forward. And none of these two can do it alone.
Yeah. As we have different sizes, right? But it's just an interesting part of this panel, the different sizes of those companies. I think we all have to take a similar decision. What is the build and what is the buy or the partner area? And I find it, and we in the team find it really complicated, because we always start as with an idea. Yes, there's an Insurtech that can actually help us to generate a new kind of business, yeah, or a new kind of technology that can enable us to build this business. And then you start discussing, you discuss, you get to something, startup is excited, and we go internally, and then maybe out excited, but somehow we don't get to the point. Yeah. So we discussed this yesterday in the VC panel as well. It's really important to get to the point and start rather a poor investment and leave it like, or let the investment grow, and out of this the cooperation starts. What is your experience there? Because it's really a challenge. Have a cooperation and an investment, or what comes first, what comes second, or have the two of them have to come together. You're facing this challenge in the last years already. What is your take on this?
Yes, you mean the challenge in entering the capital of a startup and growing together?
Yes. Versus having first a cooperation with the startup to prove the value of it.
Yes. So yes, proof of concept is really an essential starting point, and this is why you don't want to always build things yourself from scratch or go all in and invest. So first of all, to the corporations, a good starting point for the corporation is to engage in a commercial partnership with Insurtechs, And if you see that there is potential to scale across your business lines and the geographies, this is where you consider entering the capital. So for example, we acquired an aggregator in the UAE about a year ago. There was clear alignment that this was a natural digital and B2C extension to our broking activities, and it had the potential to scale across all the countries where we have more traditional broking activities. So this was a no-brainer. But now we did face some challenges in integration because we're a traditional player that in a highly regulated industry that are very and compliance is really, really important. So finding the right balance between this while leaving enough flexibility for the partner startup to thrive has been a challenge.
Yeah, we know the challenge. Right? Maybe Kagabo, do you do in tech investments, or are you really looking into new underwriting models?
Okay. So this is the interesting part, right? And that's where this whole ecosystem is interesting, because sometimes you don't know if a product is going to be successful. So we are really first looking at it from an underwriting lens, right? Is it going to make a profitable investment? Now, the sharing bit is that we want other people to come and look at the same thesis and validate it. So they're kind of peer reviewing the work that we're doing. Because there's so much time that goes into trying to understand a new opportunity and to see whether it's real and concrete. And even sometimes, you invest and you provide the capacity, and it takes time for them to even start getting traction. Some opportunities that we've been on, it takes a year or more sometimes to even write their first customer. So that's why we have a very long-term minded set. So usually we get into commercial agreements with our companies that will provide you insurance capacity for the next 5 to 6 years or even more, at the same time as our investment. So it's been interesting because we're a small team. It's a lot of work. Everyone is stretched thin, especially now, like having a Lloyd's paper. There's a lot of compliance stuff involved. So I'm starting to favor a bit more companies that maybe might have an existing book of business, because it's not, we have to succeed as well from an underwriting perspective. So it's easier to get things that roll over. But we still have appetite for early startups. We're looking at stuff that's really a bit more advanced, like AI guarantee insurance, stuff that are doing like bioscience. That's not expertise we have in-house. These are people who are coming outside the insurance industry. So all we bring to them is our insurance expertise. We can structure deals. We've done it both from reinsurance and insurance, and and that whole network that we've created of other insurers, especially at Lloyd's, is a very valuable to our partners. So yeah, even though like I said, going with like some really new avant-garde products takes a lot of time. We still have an openness to that as well.
Yeah, I think I would love to go deeper into the Lloyd's syndicate discussion, because obviously we are exposed to our own Lloyd's team over there, and it's a challenging area, right? Living in the ecosystem of insurance, digital insurance, but innovation is a challenging thing. Abdullah, you just joined us in the session right now, so thank you for being part of it. Maybe we can use a couple of minutes with your strategy in Tavernier. How do you engage with insurtechs, and how do you, because you're building a couple of digital propositions your own, so how do you differentiate what is the thing that you do build versus what is the thing that you buy?
Great question, and sorry for being late. Great question, and sorry for being late. I was in a different meeting. When you saw at the beginning, Tree is one of our subsidiaries that fully owned by Tavernier. It's a fully insurtech effort that Tavernier is taking to the future. And there was a discussion with the CEO of QIC saying that we see Tree as the future and we are competing the future. Interruption now comes from outside of the market. all of us, we saw how Tesla interrupted the motor market. And we talk about today lemonade. And so we see that this is a different vertical out of Tawniya, and we need to strategize for it, deal with it, and push it and compete with it. And both of us, we approach the market in a different way. Although we are developing our digital capabilities, we are developing our insurtech capabilities. In fact, we have now a company under us who own multiple companies. One of them is Tree, another company called MENA. We just got the license for MENA. It's a primary care digital service. So it will be providing a full digital experience with the different primary care centers before approaching the providers. This will provide more quality of services, and it will allow us as well to compete with the market and cost optimize our claims. Moreover, we are establishing our Tawniya Ventures. This will be a full insurtech company. We have investments in Europe and in the US market, but will be more engaging and enabling the insurtech in Saudi Arabia and in the current market. So bottom line, we are preparing ourselves digitally, and we are investing in others to compete with. I think this is the right move for an insurance company to cope with the future and to remain explained.
Okay, thank you for this insights. So you see Tree as the own digital attacker, so capturing the market that is not necessarily yours, but all the digital natives that are coming to the market. You want to capture the Tree, but at the same time you have Tawniya be reformized and digitalized to do more digital.
Yes.
Okay, good. I would like to come back to the earlier discussion that we had on investing into techs. We've heard Donald, later stage B and going beyond into tech, into companies. At the same time, Ping An has 3 or 4, I believe, tech companies running all the tech things. And it's just amazing what you do over there in China. I've read an article and I've seen it, that the onboarding of the sales reps is actually a selection, and the onboarding is done by AI. So if you do this in China already, so I still don't get it. Why do I really invest into insurtechs in the US? Maybe you can help us a little bit more, because there's something, obviously, because this is why you have a mandate.
Yeah. So, let me make a couple of, I guess, claims, things we believe, but many of you may not believe, about investing in insurtechs if your lineage is an insurance incumbent. The first observation, the first claim, which I think is an observation, is that when you look at just the risk return profile of early stage venture investing, it's not an asset class when you look at its performance over time, where you think, my gosh, I really got to put my daughter's college retirement fund into that asset class. It can go very badly, and it oftentimes does go very badly. I think that's not true for businesses that are maybe a little more advanced. I think that the risk return profile, generally speaking, for growth stage investing is better. If you're an insurance incumbent and you care about getting some kind of value out of the businesses that you invest in, we heard a little bit about this before. It's exceptionally hard if you are a large incumbent to get meaningful commercial traction out of a relationship with Don Lacey and 2 of his friends in a garage in Palo Alto who have kind of a neat idea. It's very, very hard to do that. And it's very hard for a million different reasons. And oftentimes, I think insurance companies that go the route of early stage investing find themselves very frustrated with how little they get out of the experience. And it's just a fact of life that it takes Don Lacey and his 2 buddies 10 years to develop a product and have adequate cybersecurity procedures in place to satisfy whatever Allianz demands of cybersecurity, to have all of the things in place that you really need as a large incumbent to interact with a smaller business. So there's a reason we aim for kind of later stage stuff. The other claim that I would make is that I think any insurance company is kidding itself if they believe that the right approach, the right aperture through which to view a venture program is to say, well, I'm an insurance company, so I'm only going to care about insurtech. I think that's a giant mistake. There are all kinds of SaaS and other solutions out there that are incredibly relevant to what an insurance company does, to the day-to-day infrastructure of an insurance company, that you would never call an insurtech. And that's a very long-winded way of beginning to answer your question, Lars. You might think, based on my business card and what I was saying earlier, that I do a ton of insurtech investing. And I don't really. A lot of the things we invest in are solutions that no one would call an insurtech investment, but are deeply relevant and deeply additive to what any insurance incumbent needs. One specific example would be, we are investors in a company called H2O.ai, which is based in California. They do machine learning as a service. And what that kind of means is that, imagine that you are someone who has a very large data set. Maybe you're a marketing analyst at a credit card company, something like that. You know your way around a spreadsheet, you are numerate, but you're not a PhD data scientist type. H2O.ai builds a solution that lets you, the numerate but not data scientist person, apply different kinds of machine learning technologies to your big set of data and get meaningful insights out of it. You know what? At Ping An, we've got 3,000 data scientists, and it's not enough. It's a giant bottleneck for us. So being able to find a solution like that lets us leverage more folks in our workforce to make use of ML, that's very, very helpful.
Okay. Yeah, I think the numbers again, 3,000 data analysts. Yeah. I don't think if we have that many in the whole region. But yes, I think this is a challenge that we are facing in the end. This is why I'm grateful here with us, because you have a global challenge and the big view on this. While we are trying to get our clients into the digital sphere, and we have to work on different kind of products. This is what we really have seen yesterday in the Insurtechs as well. It's rather business model innovation that is supported by tech than anything else. What you were talking about, that you're looking for hardcore tech to do, because you have an innovation in your, as a core of Ping An, there's innovation in there. Well, our companies and incumbents, yes, we do innovation, but we still have a path to go. Yeah, and if you've heard it from Tavernier, we're on the same journey in QSC. I think we have a couple of, we have one Insurtech called Anutech that we founded 3 or 4 years ago. 300 people strong, back office, yeah, for not only us, but for other insurance companies as well. So we're on a strong journey there. But as the ecosystem as such is not as developed, yeah, we still have a way to go. One of the reasons why we all on stage here want to do more things together, because we have to compete, but we have to cooperate on doing certain things together. And I believe this infrastructure thing that you just mentioned, yeah, investing into a company that has a really interesting technology that can help us to build an infrastructure for the industry through our cooperations for the sector. I believe this is how everybody can profit, and we actually can make an equity gain out of this. Yeah, and I like very much what you said, Kagabo, on innovation in terms of the reinsurance models and the underwriting models. Yeah, we have later today a discussion on this, how new business models and underwriting actually help on this. We have done a couple of investments not in the region, but outside. But we have seen Insurtechs coming to us. I think they were coming to you as well, coming to you for fronting and capacity opportunities. And I believe there's no standard way in dealing it right now. I think, again, this is something that we're trying to, through the association, channel this request and work with trusted insurance companies to do more of this business, because it's not easy. I believe the challenge in our region is that we have very few insurance companies that have the capital strength to do real business innovation. We are mostly brokers. We sell something and sell it off to the rest of the world, to global reinsurance companies, which leaves us with a really small margin that is not enough to really do business. QSC is different, Tavernier is different, we are different, right? But I think this is a challenging factor, how to engage in the discussion with Insurtechs. Having said this, if you would have a wish, yeah, what would be this wish for the next 12 months to happen in our region, that actually next year we can sit here and talk about big successes? Maybe we can start with you and just go through.
All right. Well, first of all, there's been a huge increase in activity in insurtech. If we look from 2 years ago till now, I mean, and the creation of the MENA Insurtech Association is a testament to this. Now we're starting to have serious players. What I would like to see is this to continue coming, and I would like to see also diversity in the business problems for incumbents that these insurtechs can address, whether it's the flashy distribution models, or it's helping to strengthen or modernize the pillars that help us stay resilient. What I would also like to see in the landscape is to refer to Caribou's 2021 versus today startup landscape, to have more insurtechs that are long-term minded, that are not about thinking about the next investment round and how to maximize their valuation at the next round, but rather to focus on sustainable business models, to pace the growth in a way that doesn't crumble a few years, that doesn't crumble in a few years, just to be very visible and targeting certain KPIs that are not relevant to incumbent partners. Because at the end of the day, we're business people. We're in this business to stay in it, and we look at insurtechs with this very strategic angle. We don't think about an exit. We think about a new member of our family. So it's essential to have a long-term vision when doing this.
Thanks, Edwin. And maybe Kagabo, the same question, but if you're in a Cayman, right? So nice place. We are in Bermudas, I believe, and our reinsurance yet. But if you could bring part of your business model to our region, what would you do? What do we need to do to make this happen? Because I believe this is really innovative what you're doing. Would love to do more there.
Yeah, and honestly, that's why I came to this conference. That's why I'm here, because I'm trying to explore ways to bring what we believe has been a successful model for us in the US and in Europe at Lloyd's to this region. And I would maybe like to see a bit more underwriting expertise, so there's that whole thing you're saying that most of it is a broker model, ship the product somewhere, squeeze out some distribution costs. I think it's important for insurtechs, if they are going to be receiving underwriting capacity and investment, to have underwriting expertise internally, so that when you're engaging with them, they actually know what they're talking about in terms of the potential outcomes for that product. And the other thing is that at Lloyd's, it's a very successful model. Like the Lloyd's Lab, there's a lot of incubation of programs where insurtechs come into the Lloyd's Lab, get introduced to different market players on how to approach and underwrite. I think that model could be done here as well, sort of like a Lloyd's Lab type incubation program, where then you have different, underwriters or insurers, and then even investors are also engaged in the same ecosystem. They share, across the program. I mean, it's okay that the programs are not big enough initially. They will get big, In most cases, people like to keep a program for themselves because they think it's too small, but that's not really the way to go about it. For the ecosystem to grow, it's important that, market players and incumbents share those programs together. So hopefully in 12 months, we see a bit more of that in the region. And this is a start, right? It's good for me to know different people who are playing in this market, and then we'll approach them to see how we can collaborate some more. Yeah.
Thanks, Kagabo. And you're absolutely invited. I think we have capabilities with Antares and the Lloyd's Syndicate. Donald, maybe a little adapted question to you as well to finalize our podium. you've seen us in the last 2 days, right? A little bit, yeah, how the actors, how we think, right? You're obviously working for Ping An Voyager Fund, seeing what is in China happening in the States. If you could give us this one thing that we say, Lars and team, next 12 months, focus on this, what would that be?
I'm glad you're not asking me what exactly I want to see in the region for the next 12 months. I'm here to learn, not to give advice, Lars. I guess I would let me maybe answer the question this way. There's I guess I would respectfully and very aware of my ignorance of the region suggest two things. The first thing that I would suggest is that if you are an insurance company in the region, I think it would make a lot of sense for you to think about innovation with a much wider aperture than just insurtech. I would encourage you to have a much more expansive conception of what constitutes innovation. I think if you focus too narrowly, you miss a lot of opportunities, and you may miss the best opportunities. The second thing that I guess Caribou talked a little bit about AI. I guess that, you know, at Ping An, we have lived the value of AI, and I believe we're at a point where you don't have to be at massive scale to realize the value of AI. I'll give you a specific, because we all talk in generalities at these things, right? And you get excited, and then you walk out of the conference and you're like, well, what did that guy actually say? So I want to tell you a specific like AI story that we actually do at Ping An. So this is not like a science project. This is like a real thing that we do like at scale. We have, I think, 1 million calls a day that we get, inbound calls. We have recorded all of them. So every time we get an inbound customer service call for the last how many years, we have recorded and digitized all of it. And what that means is that we have this giant corpus of data on what customers sound like in different parts of China. And we also have a pretty good sense of what people care about. What we have done is we've created an outbound calling system that consists of computer-generated speech. And we know that Lars is from a certain part of China, so he likes a more informal kind of howdy drawl kind of way of talking. And so we have a computer that will place a call to Lars and market Lars a very basic kind of single premium product. And we'll do it in exactly the tone of voice that we think Lars likes and the style of speech that Lars likes. We'll do a different thing for Abdullah when we call him. And we sell very basic policies, like single premium policies. And when we started out selling those policies via a human telemarketing team, and when we did that, the response rate, the hit rate was about 10% of the time somebody would say yes. We'd pre-select the people we were calling, and about 10% of the time, the human calling team, Lars would say, yes, I'd like this policy. We fired the 2,000 people who were doing this. We fired all of them, and we replaced them with this robot that was just a computer-generated speech, calling people and saying, hey, would you like this? And interacting a little bit back and forth when Lars maybe has a question about it, or Abdullah says, well, I'm not sure, I need to check with someone. And guess what happened? You would think maybe it would be a success if, we have no cost. Our marginal cost of placing a call now is 0. So if we're getting a 5% positive response rate, you would think, hey, that's pretty good. No, 25% positive response rate. So in fact, more than 2.5 times as effective as the people who were calling. And that's something we did a couple of years ago. I think it's the sort of thing that is now much more widely accessible. So I would think that would be a cool thing for the region to think about.
Thank you, Donald. I think there are two segments in here. One, we have a panel this afternoon at 2, AI and talent. So this would be the right segment for it. Secondly, our countries are built off on the shoulders on many people not living here or coming from here. Right? So we have exactly this challenge. There's no solution, but we don't have offers, right? For the different kind, for the Germans in Qatar, is there a special offer? No, I get the same thing that everybody gets. So absolutely, have propositions that are targeted to a certain segment are absolutely relevant. So yes, I think everybody of us is working on this and will get something. Abdullah, if you think about the next 12 months, we obviously have identified a couple of things that we believe we should do together, right? I think we need the ecosystem to grow, what else would you chip in?
Only one wish.
Yeah. But there are three, right? In Arabic poems. Or
What I'm seeing is dreams becoming reality. This gathering, the momentum, the understanding in this region, as you can see, growth happening rapidly. What's happening in Saudi, what's happening in Qatar, UAE. So there is a lot of development. So insurance need to come up with innovative products like what Pangan is doing. I believe there is a lot to do. What QIC is doing now as a commitment of developing the culture, the know-how, we will be so engaged in this. So our commitment and wish to make this more sustainable in collaboration with the founders. So this is a wish that I'm seeing, bringing a lot of technologies from China, from US, Europe, Africa to the region. I believe this is achievable that we can do, and having the vehicle. Getting a lot from our partners. I see Deloitte is a founding partner. So we'll push, we have a lot of contracts with them, by the way. Hello, Magic. We'll push them for a commitment to the InsurTech as well, to us and the community. I believe those are all achievable.
yeah.
And we hope to work all of us towards this.
Thank you, Abdullah. That was a nice, encouraging final words. Fantastic. Thank you very much, all panelists. We have today, in the afternoon at 5, the top 5 insurtechs that we will award, right? And as we have seen 30, the 5 are the ones, and hopefully the 5 are the ones that we actually can work with. I've seen obviously clamps on them, yeah, already, and I can confident that there are enough opportunities for all of us to do something amazing with them. Thank you very much for the time with me on this panel. Can we have a quick photo? Can we have a quick photo, please? Thank you. Thank you all. Thanks. Okay. Thank you. All right.